I trust you are all well and having a good time. So I'm hoping that most of us will be able to attend the Best Price Actions course taking place tomorrow. Probably seen all the links, 12 to 4 p.m. your time. Let's have a look at what's taking place in the market. Got a few markets in front of us. And I'll probably point out some of the areas where patterns that I want to be talking about will lead to as you are looking at the market yourself. First market in, DAX 30. You can see right here that was the open. Actually, I'm saying you can see, that's not fair. Market opened here, 10 o'clock. My time, 4 p.m. if you are in Sing or in that zone, Hong Kong, etc. We are in a trading range in the market. So we're going to need to wait. Well, what are we waiting for? We are waiting for the market to give us some kind of direction, indication of some kind of direction out of this zone. You can extend it back as you want. So we are in that trading range. So we're going to have to wait and see, are the bulls going to be strong enough to break out above? Or is it going to be the bears? And when they start to do that, we'll look for indicators to show us signs of strength and where we can possibly get into the market. Next market up, UK 100. Okay, so the market opened here. Bulls tried to break out, gone sideways. Bulls failed. Bears tried to break out beneath the low of the open. And also, this is the low of the Asian session. So, the present low of the day is within there. Bears are trying to get lower, create a new low of the day. So if that low here is the low of today, the bears are trying to break out beneath that, which is fantastic because what you want to see is the market breaking out of that bit of follow through. And then we want to look for, you always either trade the breakout with a wide stop or you wait for a pullback and trade that with a tighter stop. So always one of two ways, but we'll have to see confirmation of that. S&P 500. So the thing I always say to guys, if you trade in S&P 500, all of these, you can trade them 24/7, but you always need to be aware of when a particular exchange opens. Okay, so for S&P 500, even if you trade in the Dow Jones or the NAS 100, you need to know when the US markets open because volumes may change the structure of the market. Have a look at here. So you could have been happily trading, throughout the Asian session, but as long as you are aware that when London opens, the volumes may change the structure of the market. So you just need to be deliberately aware. That's one thing to be aware of. It's almost just like we try and watch out for when news comes out. If you haven't picked up when news comes out, all of a sudden it would be a huge trend. Can you wonder what is happening for that to be news? So we just need to know what's taking place. S&P 500, right, from this sell-off, not a strong bear breakout with successive bear candle, but the market did go down. So it's trading range behavior, overlapping candles, but the market is still going down. Now, we've come down here, double bottom, small double bottom here, and a high low double bottom. So off that, the bulls want to accelerate up. But if you just look at that breakout, it's starting to go up, but we don't have successful bull candles. So if the bulls go up in the way that the bears have been going down, it's pretty difficult to get into the market, a market like this, okay? Because you're going to have to say, I think the market is going down. Let me just find somewhere to sell and put a wide stop. But it's just so unclear, it will be very difficult to hold on because it looks like it's continuing to reverse, but it continues to go down. So it's probably better when you see a market like that to just note what's happening. And if you then get successive bull candles, come back and try and find a way to get into it. Nikkei 225 sold off, when it opened. And then after the big sell-off, we came back higher low and the bulls went up. Now, the way the bulls went up here is different to the way they're trying to go up on the S&P 500. But here, you're getting successive bull candles, bull breakout, pull back, high one entry. That's one of the things that I'll talk about. This is where you got to choose. Do I trade the breakout? Okay, you can trade the breakout, put a stop down here, knowing that the breakout can fail and you get stopped out. Or you can let the breakout go, wait for a pullback, and you can trade here. It's two sides to price. If you were, okay, this one is a small breakout in the pullback, but if you're here waiting for the pullback, by the time the pullback comes, the market reverses. So you just have to accept that sometimes you get a decent enough pullback, which you must look to take with a tighter stop. And, if you don't rush to pull your stop up, you might have got a little bit of a reward. If you take it and you exit when it's going sideways, you get a bit of a reward. So right here, double bottom, we are within the large trading range, probably best to wait. Hang Seng 50, big bull breakout. Again, you can take the breakout trade anywhere here. Anticipate or say, okay, oops, I'm not going to take the breakout trade. I'm going to wait for breakout pullback. Breakout pullback, high one. And the high one came here. If you had taken that, you'd have been stopped out a little bit. Yeah. But that would have been a valid trade. You don't take the breakout, you take the breakout pullback, high one. Now we're just in a huge trading range. It is best to wait. Okay, I want to let me do gold. I want to get to the currencies pretty quickly. Okay, gold. Now this is way before. So if you're in the Asian session, bear breakout, pull back, or it's a trading range, pull back to the EMA. I mean, I think if you saw the PowerPoints that were sent out, some of the trades that I've taken, you can trade that as a breakout, pull back, or breakout beneath a tight trading range. You'd have gotten your reward. So you get a breakout beneath the tight trading range. And if you trade in that, stop is here. Profit target 1-to-1 hit. And if you let it go a little bit, there's a little bit more. Another breakout, pull back, low one. Decent enough trade to take here. So a couple of reasonable trades. Now, something important. One of the things that we'll talk about tomorrow. So I'm showing you. So I will cover this as we go through the workshop tomorrow. But this is quite interesting. Because when we are trading, something else comes into play. So if I say to you, well, have a look at that. We broke out here, we pulled back, and we hit our profit target. You could have taken it as a breakout, pull back, low one entry, or it's just a small trading range breaking out of that, and you still get your targets. Piece of cake. Same thing here. You could have said, well, I could have taken that as a breakout. There is a pullback, and there is a profit target. So if I'm taking that, I get to my profit target quite easily. Profit target, profit target. So both 1-to-1 or a little bit more. Oh, and then there's another one. But there's a whole lot of stuff happening in between here. Okay. One of the things we got to realize is these high potential trades, when they do okay, they come after certain price actions unfolded in front of us. And that's what we also need to be able to work our way through. How do I make sure that when the market is doing that, if nothing has set up here, we don't have the successive bull candles until we break out here. How do I make sure that I can wait until I get these setups. Okay, so the best price action patterns course we'll be talking about. I mean, these are pretty good, high reward, high probability setups. So we'll be showing you all of that. And then, of course, you're going to have to know if it's not there, there's nothing to do. So then here, I want to get to a couple of currencies very quickly. Market tried to go down 3 times, 1, 2, 3. Okay, we broke out beneath this, and 3 times tried to go further. That's a wedge. And then from there, we are starting to go up. Now we're starting to get good successive candles. So there's ways to have gotten into here. If you always have an option. Do I get in at the breakout stage? Or do I wait for a pullback? So you might have seen that and say, okay, first breakout, I'm going to wait. Well, you wait. Now we have a breakout. This is a pullback, and you wait for a better entry, and that will have been a better entry. If you're waiting for a better entry, all it means is that you have a lot more confirmation, right? If you have a lot more confirmation, the price has moved away from where you had lower probability and the stop here. So yes, you can still make money, but you don't make as much money as here. But if you just set in your targets 1 to 1, bang, and we're going beyond this. All right, have a look at euro. Okay, we are up in the trading range. That was the moment trading range. We broke beneath it. And now we have a decent enough bull breakout. And while we're waiting for a pullback, we didn't get the pullback setting up with breakout. Pullback should have accelerated up. So we are coming back now. So we need to wait, okay? Because what you want to see is a breakout, pullback, and acceleration up. So if you're taking the breakout trade and it's starting to fail, then you must exit, break even, a small loss. But if you're waiting for a high one, if you don't get it, well, it is not good. Let's have a look at CAD. Okay, this looks almost like a textbook illustration, doesn't it? Okay, so European markets opened here with a failed breakout beneath the low of the day and bull candles, bull breakout. And again, choice. I'm going to take the breakout trade or I'm going to wait. Okay, so that's the breakout trade right there. And you're waiting for the pullback. Well, in this case, we've been rewarded pretty quickly because they're dodgy. And I'll talk about it in the show tomorrow as a price action pattern. The breakout, a doji, is a pullback. So you just have to enter just above there. Okay, then we talk about where to put the stops. So that's a nice entry. And you still rewarded a very strong trend with another breakout, pullback, another entry. So a few entries in this market can trail your stop up. And then we get here and the market fails and the bears are starting to sell off. I mean, this is pretty class. If you get this, if you take that or take that or take one of those, you'll be rewarded quite easily. Okay, let's just pick one more cross, Euro Yen. And we pick one that's in there. Oh, that's interesting. So the market has gone up. But if you ever look at that, just by looking at it, you can see, well, it's going up, but it's in some form of a channel. Okay. And if it's in a channel, you don't do anything until or unless you get a decent enough entry at the test of the channel. So if the bulls had come down, bears rather, and we had a double bottom, high low double bottom, that's what you take. It's just accelerating up. If you take that trade, stop is here, but you get right to the top of the channel. So it's not giving you much opportunities until you start to get high low double bottom, double top. It's in a tight channel, trading range, and you can see the EMA is just pretty flat in the middle. It's like a trading range that's just been turned at an angle. All right, guys, let me see. It's 10 EMA, exponential moving average. 10 EMA. That's the blue line is a 10 EMA. All right, guys, thank you very much. I certainly am looking forward to seeing as many of you as possible in this session tomorrow. Best price action patterns course. Marlon, thank you. And Marlon is also hosting us. We'll see you guys tomorrow. Take care, everyone, and bye-bye.